Hello everyone. Now we are going to solve exercise 1, page 7. In this exercise we have list of transactions and it is required to complete this schedule and to show the effect of transactions on accounts. Before we start explaining, I'd like to note that each account title on the top of each column is given. So it is given that in this column the cash, the accounts receivable, land, equipment, accounts payable, long-term loans, capital, revenues, and expenses. So these accounts are given. However, in this column we will fill the date. Let's start with the first date. First date is on May 2nd. Mr. Sam started with 80,000 in the bank account. We have on May 2nd, so the date is May 2nd. We have in bank account $80,000. Since we have $80,000 in bank account, bank is the cash. So when we say in the bank account, so we have cash $80,000. So we have cash $80,000. We started the business with 80,000. We start our work with 80. So this investment to start a business is recorded under capital. Now on May 6th, purchased equipment worth 25,000 on credit. So the date is May 6th. On May 6th, we purchased an equipment for $25,000 on credit. We purchase an equipment, so the equipment will increase. When we purchase an asset and equipment, so these assets are the equipment will increase. So we have equipment 25,000. We purchased this equipment on credit, so on account. We did not pay for this equipment. Since this equipment on account, we have to use the supplier's account. Accounts payable is the suppliers on credit account. When we purchase an asset on credit, we have to use the accounts of suppliers, which is accounts payable. When we purchase an account on credit, this account will increase, and when we pay the amount of this account will decrease. So we purchase equipment on account, so we have to use the account of the suppliers, which is accounts payable. May 10. On May 10, performed services on credit totaling 10,000. We perform a service for a client. Always, when we perform a service, we have to use the revenues account. Because the service is considered as revenues, so we have service revenues. So when we perform a service, always the revenues will increase. The amount of the service in this exercise or in this date is 10,000, so we have $10,000. But this service was performed on account to a customer. The customer's account on account are recorded under accounts receivable. So since we perform the service on account, we have to use the customer's account, which is accounts receivable. This account always increase when we perform a service on account, and this account will decrease when we received money from customers. May 14. Take long-term loan for a land 70,000. So we take a long-term loan to purchase a land. So since we took long-term loans, so the long-term loans will increase for 70, and we purchase a land, so the land will increase as well for 70. May 19. On May 19, received a check of 5,000 from a client in payment on credit. So we received cash, received a check. When we received a check, so we received cash amount. We received a check of 5,000, so the cash will increase by $5,000. from a client. So this is the account of client, or the account of customers. When we received cash from customers, this account, which is account receivable, will decrease. So $5,000 between the brackets. Between the brackets mean that the amount is negative, or that the account is decreasing. So always when we have accounts are decreasing, we have to put the amount between the brackets. 24, paid $11,000 due to suppliers. So we are paying, since we are paying, the cash account will decrease. We are paying 11, so we have to put $11,000 between the brackets, and we are paying to suppliers. The suppliers account, as we previously explained, are under the accounts payable. When we pay these accounts will be decreased, so we have $11,000 between brackets as well. May 30, paid 4,000 Rand for the current month. We are paying 4,000 in this date, so the cash account will be decreasing, and we are paying this amount for Rand. Rand is considered as expenses. So every time we incur expenses, the expenses account will be increasing. That's why we have $4,000 positive in the expenses. And finally, we have to find the total of each column. 80 plus 5 minus 11 minus 4. So we have 70. 10 minus 5, we have 5. 70 only for land. 25 equipment. 25 minus 11, 14 in accounts payable. 70 only in long-term loans. 80 for capital. 10 for revenues, and 4,000 for expenses. Thank you. I'd like to note that the solution is on PowerPoint as well, and you have to check the exercise 2, page 8 on your book, and to solve it, it is similar to this exercise.